Hello, everyone, and welcome to another edition of This Week in Crypto. This is a community call where Sentiment team and community members share some of their most interesting insights and chart setups that they have found throughout Sentiment's platform, our on chain social and development data and indicators over the last week. As usual, we are joined by a multitude of Sentiment team members. I will give the floor to Brian to start us up on today's insights, and then several of Sentiment members will take the floor after him. So, Brian, whatever you want to start, the floor is yours.
Thank you very much, Dino. Let me know if you can see everything okay.
Yep, everything seems in order.
Beautiful. All right, so we are looking at NVT to kick it off, as we usually do. What we have seen over the past week is sort of what we're seeing in the actual price fluctuations. We're seeing a lot of indecisions right now. We have been red for a seventh straight month, which typically means, but not always, that price is likely heading downward. But we've seen quite a bounce from December, where we were in the low 7,000s, all the way up to the low 9,000s. And now we've kind of split the difference. Over the past 3-ish hours, we've actually bounced from 8,200 up to about 8,430 at the time of me talking about prices. We are seeing NVT dip down below the green trend line here, which is the top trend line we need to break right now, over the past couple days. Yesterday in particular was actually a good day for NVT. We had an increased amount of token circulation that fell below 3 of the 4 trend lines. This blue line is the only one it needs to break here. But overall, if you look at the monthly average of January, 24 days have been entered now, and we are still in the red, meaning my stance is still that we are below the qualified level of token circulation based on the market cap that we have right now in Bitcoin. So I encourage everyone to proceed with caution based on this until we start to see the average bar drop below these trend lines. That's what we're looking for here. A quick look at Ethereum shows that it is not nearly as promising, actually. And I think Dino later will talk about Ethereum a little bit and why this might be happening from a whale perspective. But overall, if we just look at the transactions happening on a token circulation perspective, we are way in the red. And the last 10 days in particular have been fairly not good because we are basically above this average red trend line for all 4 of these hash marks. And we want to at least see a little bit of a encouraging sign a day or 2 out of the week or so, which we just aren't right now. So altcoins in general, there may be a few exceptions, but generally when Ethereum is looking poor like this and we're not getting a lot of transactions, it's a sign that many other alts, especially ERC20s, are just not getting the proper amount of transactions based on our market cap right now. That's a quick NVT update. Any questions on this before I move on to some other analyses?
Just that it definitely looks like that. We'll later on look at Ethereum's on-chain activity specifically, and it definitely looks similar to what this chart is showing. Basically, for the last couple of days, there's been little to no, well, little on-chain activity compared to, Ethereum's relative numbers. I think a lot of people are kind of indecisive at the moment and are trying to, stay on the sidelines until the market decides which way it's going to go. So it seems to be a lot of indecision in the market at the moment.
Yeah, and that's what's great about token circulation is it doesn't favor whales when looking at this. It really shows every single address, big or small. And if a whale makes a transaction in a day and then continues to move that same Ethereum address, it only counts as one, the same as someone who only has, $20 in their account. So this is showing from an equal perspective that all of those Ethereum addresses collectively are not living up to where they should right now, to keep Ethereum's price where it has been the last couple of weeks. So I'll be very interested to see your Ethereum analysis and how it compares for the whales, Dino. Okay, so I'm going to move on to top holder supply, which I introduced a bit last week, but since that time I've done some updates to the graphs. Last week, if you remember, we took a different look at essentially what was happening with top holders percentages, and I actually had it set up so that we could see intervals of 1% or more of those percentages. I won't get too in the weeds, but basically I made it a little more accurate in order to find days when any of these coins that I'm tracking right now are having outlier days in a good or bad way with their top 5 holders. And it's no longer dividing a percentage by percentage. We're actually doing it in a more proper way. And I'll write an article about this soon, which will explain it better. But in short, what I'm looking for are outlier days for any of these tokens to have large improvements or large decreases in what those top 5 holders are holding. And I'm actually going to show you the cumulative graph first, because I think it really tells a nice story over the last 30 days, particularly over the last couple weeks since we had that big altcoin craze around the 10th through the 20th or so. These are now area charts, so you should be able to see the lines a little bit better now and really see when things are overlapping. And right here is the Bitcoin price line. So try to look at this independently from all the other colored lines, because it's using the right axis instead of the left. This is actually showing how other coins have reacted, how those other top holders, I should say, have reacted to Bitcoin's fluctuations. And particularly, take a look at this gray line here. This is actually DAI, which is a stable coin and tends to precede many moves in altcoins in particular. We've learned in the past it has kind of a correlation to Ethereum. And what you can actually look at is how DAI has kind of mirrored what Bitcoin has been doing, particularly right when it hit the top here. This was the day it hit, the average was 8,900, but it actually hit 91 that day. And right when it did, the top holders of DAI, who had been over the past 18 days or 17 days up to that point, I'm sorry, it starts the 23rd, so we'll call it 3 weeks or so, they had increased their bags by 3%, which was the highest of any of these coins that I'm tracking. And all of a sudden, they made a huge sale. And this sale actually brought them all the way to -8. So someone realized it's time to dump a lot of my DAI. They either did that in order to get into another token or whatnot, but I found it very interesting that they basically made a 11% switch right at the day that it was at the top. And I'm going to be looking more into the correlation between DAI and the overall markets, because it appears that the top 5 holders have a very they seem to be in tune with what the markets are doing, Bitcoin, Ethereum, or otherwise. So watch this gray line with me over the next week, 2 weeks, and we'll see exactly what's going on with this, because they seem to have done a very good job of buying and selling based on what the markets are doing. You can even see here, they started making buys right at the bottom over the last 30 days when we were at 6,900. And they've been climbing ever since. So I'm very interested in that. Other notables, we have REN, which is up 1.7% total of the top 5 holders over the last 30 days. Ethereum is still looking good at over 1%. And then a lot of them are in the middle. Maker, which I know a few of our team members track carefully, has actually been low. They've been negative 3.6 over the last 30 days, with most of that happening about 3 weeks ago. So that's very interesting as well. And I've got lots more to say about this, but I'll save it for another time because we have a lot of topics we're going to touch on today. Any questions on this one?
Just that I think, like, let's go over other things that you have to show today, Brian, but I would definitely want to spend some time later on looking at this dye dump a bit closer. I'm wondering what we are going to see on our send data top holder charts, whether this was a move of exchange-based wallets or non-exchange wallets, and how those two have kind of behaved over the last month in correlation to Bitcoin. Seems like a pretty substantial dump, no matter who's done it. A move is a move. So, yeah, go ahead with the rest of your explanations, and then we can take a deeper dive into Diametrics a bit later on.
Yeah, you bet. All right. Okay, so this is a new Sandsheets model that I'm working on that tracks outliers in development activity. As you guys know, we've been tracking development activity for a while, which essentially is a way of seeing the GitHub submissions for various projects and looking for uptrends and downtrends in them in order to give us a picture of what their teams are actually doing behind the scenes, how much they're actually working on these tokens, whether it's increasing or decreasing over time with the rate in which they are putting in their submissions for these developments. So what this is doing is actually putting them all on an equal axis, because as we know, a project like Ethereum has the second most. They had the second most of any token out there in terms of development activity in 2019, whereas something like Bitcoin Cash doesn't have a whole lot of development. And what we want to do, instead of just measuring all of the submissions that Ethereum has on a daily basis and comparing them to Bitcoin Cash, why not compare each project to itself and look for percentage gains and percentage losses in a given week or month? So what we're looking at now is the 7-day development activity versus the average of that particular project. So all of these are measuring versus themselves in terms of their typical development activity that they've had over the past year or so. So as we can see, there's a lot of green spikes, and you may ask, what's going on with that? The answer is that Bitcoin Cash, which is what the green is, sees a lot of weeks where it's either doing no activity or all of a sudden a lot of activity. And what this does is measure when those lots of activity weeks are happening, followed by almost no activity, which is why you see a lot in the green here. This is when they basically take a week off and aren't doing anything. And then we see here on like the week of August 17th, they did a lot. And though we can't see the prices of each coin compared to their development activities, which I tried and realized it was just way too many lines and too cluttered, we can look at how it did versus Bitcoin. And what I'll eventually do is have some slicers installed here where you can isolate one project at a time and see what prices did following these high uptick development activity weeks and conversely the low activity weeks. For example, we can see here recently we had Ripple have a big outlier week. Ripple is the pink here, and the week of the 11th was the week that a lot of altcoins did well. Ripple had a particularly bullish week that week, right after it had its biggest spike, one of its only big spikes in the positives over the past year. And keep in mind, these spikes for noise reduction, I set it up so that you would only see them show up if there was a 3x or more spike versus the mean. So if, for example, Ethereum does 100 submissions a day, and over a particular week, let's say their average is 100, and then one week they do 350. per day over that week. That would show up as a spike because it's over the 3x threshold. Conversely, on the downside, they only show up if it's a third or less versus the average. I won't get too deep into it. Just know that not every single bar for every single project is showing, because we would just see a whole lot of overlapping like we do in a few of these weeks. And it basically just shows the very extreme weeks so that you can look at this. We have 15 projects here, and you can say, okay, all of a sudden, this black line, if I can double click it and see what it is, this is Binance Coin. It looks like Binance Coin has had a few weeks over the past 6 to 7 months where it exploded with development activity and then just disappeared the next week. So it's doing something similar to Bitcoin Cash. This brown token is Huobi token, which right now what I'm just doing is displaying the top market cap coins with a few exceptions to replace tokens that were not showing relevant data. But for the most part, this is just at the top. So Huobi coin, I may change just because there's not a ton of interest on our side on that, and we might have some more useful things. But we see that most recently it had a very large uptick in development activity, and it's something worth looking at. I also want to just quickly show you what the 30-day one looks like. Right now, there's a bit too much overlap, so I may do some modifications on this. We saw, for whatever reason, the month, let's see. You know what? So the labels I have to fix here. So I'll just tell you that this was probably about February of last year. This is when we saw a ton of downward movement for whatever reason. And I wanted to look into why that would happen. But interestingly, Bitcoin started to surge here. And then a lot of projects began to normalize, and their development activity started to become a lot more, there were a lot less outliers going on this chart. But long story short, I've got some things I want to work on as far as this development activity template, and I think it's going to start showing some very interesting insights about what projects are doing, and when they start to have an uptick, that might be the time to really jump in and take a look at them as an investment opportunity.
Brian, can you also can you go back to the previous chart, the 7-day view? And so, what were the two coins? There was Ripple and there was Huobi, right? Can you look into Ripple's development activity on Sandbase, just so we kind of see what it looks like on our platform, so that we understand how it correlates or shows up on your template when there's an extreme spike?
Check it out.
So for those that are not familiar, while Brian is doing this, on Sandbase, our main platform, app.sentiment.net, you can find the development activity data for all of the projects in our database, meaning over 1,200 different cryptocurrency projects. We have a special method that we use to calculate this data. I don't know if is somebody from the development team here? Valentin is. So, Valentin, if you want to give like a brief overview of how we do this and what the development activity actually shows in terms of, where we get this data from, feel free to.
Sure. So we don't look at number of commits as some other websites are doing, because this could be easily faked. And also number of commits is not showing you the correct picture if you have projects that just fork each other. For example, Bitcoin Cash is a fork of Bitcoin. So the moment when you fork the source code, you're going to inherit all the commits from the Bitcoin development. So what we do instead is that we look at the GitHub events, that are generated for these projects, which is something that is much harder to fake, and it's actually impossible to change the history of these events. While for commits, it's possible to go back and change your commits in the past. There is an article on our Medium that explains like some technical details around it. But the important point is that it shows you the activity these projects are having on GitHub. And it's much harder to fake than counting commits.
Yeah, thanks, Val. And there you see the spike in Ripple's development activity over the last week. It's the year high, it seems, maybe even more than that. Okay, I'm not sure what's been going on. I know that there's been some news about Ripple they're sort of selling less of their XRP than usual in this quarter so far, but I haven't really seen any sort of at least so far, any sort of announcement of a new project or an additional feature to their network. So there might be something going on, or it could just be them doing some additional work since the start of the year. Who knows?
Yeah, I saw some minor talk about it, but there hasn't really been a single news instance that came to mind for me during this big development activity week here. But yeah, this aligns exactly with the model, where we can again look over here and see here we go. The big pink bar. This is the week of the 4th, which aligns with this week here, beginning when it started to rise. And what my model does is it takes the entire week. So from the week of the 4th all the way to the 11th here, this is when it had its huge spike. And I'm guessing the week after didn't show up because it started to decline that week. But essentially, we saw that big development activity spike, and then the price started to rise, which tends to correlate. I wouldn't say it's 100%, but it's definitely over 50% of the time. When there's a development activity jump, there's a price jump soon after, usually a week or two. So it's something to keep an eye on, and we'll see if Ripple keeps up this momentum, because as you can see here, since early May, it's really started to increase its submission rate here. Looking at Bitcoin Cash, which I wanted to quickly do since it has so many entries on my model, we can see that it's reflecting all of those high fluctuations. They're either doing lots and lots of development activity over a given week, or they just take breaks, like we see here in the summer. July and August, they did very, very little. And then all of a sudden in mid to late August, they exploded and then took another break. So I'm not quite sure what to make of that, but we'll see if there tends to be a correlation with development activity and the price of Bitcoin Cash. I think looking at this chart, it can be pretty sporadic and not very reliable. I may, unless we have some demand for it from our customers, I may even just replace it with something that has a little more consistency and tells more of the story. But very interesting nonetheless.
Yeah, actually, it's funny that you mentioned this. Anybody looking at this, watching this live, you can go to our insights, and the last or latest insight that we wrote is about Bitcoin Cash and their development community. So it might be related or it might not be, but yesterday it was announced that the top four mining pools of Bitcoin Cash have kind of banded together, and they will impose a 12.5% pretty much tax on all the block rewards, and they will orphan all of the blocks by miners that do not adhere to these rules. So basically, it's a tyranny of the majority, as some of the people have kind of labeled it already. So the reason they're doing this is so that they can finance the future development of Bitcoin Cash, because the narrative is that developers aren't going to be working for free forever, and that there needs to be additional and fair, robust incentives for them to keep working on the network. So it might be that these two events are kind of connected. Will be interesting to see what happens in the future.
Very interesting. Yeah, I haven't checked this article out yet myself, but yeah, we'll probably make a marketing announcement about it today, so you guys can check it out and have the link. And thanks for giving this this news event some attention here. Cool. Well,
Yep.
I'm going to hand it off to you here, or whoever would like to speak next. But yeah, look for more announcements about the development activity template as well as the top holder template coming up over the next couple of weeks. And anyone who's pro will have access to them and can give us our thoughts about how they can be improved.
Okay, cool. Thanks, Brian. So when Brian means pro, anyone that subscribes to the pro plan of app.sentiment.net or Sandbase will have access to all of the market templates similar to the ones that Brian has featured in this week's call. We have about a dozen of them already and are constantly making new ones. Everything from the NVT ratio that Brian has shown to some specific alphas, such as the divergence signals between the price and daily active addresses of different coins that we have developed in-house, and they aren't really available anywhere else. So if you want more information, check out app.sentiment.net and become a pro user for a month and see exactly what we offer. Thanks a lot, Brian. I will now give it up for Jan. Jan is our data scientist, and Jan has been working on some pretty interesting models involving our top holder metrics. So the data that we collect from the major whales of the different coins and different assets and how they have been behaving over time. So Jan, if you want to share your screen and kind of give us an overview of what you've been working for and some preliminary results, and we'll go from there.
Yeah, okay. Yeah, so this is very, very early results, obviously, but yeah, let me just share the screen. All right. Cool. So yeah, just like Brian, I've been looking at the top holder distribution, basically. Specifically, in this case, I was looking at the top 100 token holders, excluding exchange, and basically trying to see if I can find something. If basically the idea here is to see if this distribution, this token holder balance behaves abnormal. I basically look at the rolling standard deviation over the percent changes of this metric, and then I trigger basically a signal every time that exceeds, in this case, 3 standard deviations, basically to mark something that is unusual changes. And yeah, we can then plot this. In this case, I was looking at Maker in this case. And these are, for example, the results of the signals that you get when you plot these outbreaks, basically. And it actually looks pretty interesting. I think you have a bunch of pretty, like the yellow one in this case is more of a buy, and the reds are more of a sell signal. And you actually get some pretty interesting like buy signals. Here's a sell, like this is a clear sell here. Here is a pretty interesting buy. So generally this is just like a first look at it. But yeah, like it seems like this could be very, very interesting also from a statistical standpoint.
So yeah, just to be clear, what you're showing on this particular chart, the yellow lines correlate to times where the top 100 whales, non-exchange whales, so personal wallets of, in this case, I think Maker, have accumulated abnormally compared to their relative sort of holdings, right? So these would be
Exactly.
the yellow entries on the chart, and then the red entries or red lines would be times where whales, in this case MKR whales, have started dumping their coins or at least moving them from their addresses, let's assume to exchanges, for example, especially during an uptrend. I think that's a pretty fair assumption to make. So these red lines would actually be occasions where MKR whales have been dumping their coins maybe on the market. And we can see that especially the last 4, 5, 6 lines have pretty much been able to capture the interim tops for Maker. So the behavior here is as I explained it, right? So yellow ones show abnormal accumulation among whales, which can be a sign of confidence in the coin or somebody in the know preparing for a rally and a pump. Whereas the red lines can be considered bearish indicators because whales are dumping on the market, especially during an uptrend. That's something to take a look at.
Yeah, exactly. So yeah, makes intuitive sense, I think, to say like whenever these guys really stack up, that's probably an interesting sign. And whenever they dump their coins, could be getting dangerous, basically. And you can also do basically you can average over what happens on average around these events. So when I'm looking at the buy signals only, so only the yellow ones. This would be the price on average around that. That's what's generally referred to as an event study. So this 0.0, we have the event. So the signal is triggered. And this shows you what happens on average before and after that signal.
So the price, right?
To the price, yeah.
Yeah.
And so this also kind of shows it's got relatively low number of signals, of course, so I wouldn't perfectly rely on this, but this looks so far pretty interesting. You kind of want to have that V shape somewhat. You want to have the price drop before, and then we have the buy signal, and afterwards it goes up by, in this case, like 6 to 8%, I guess, within the next 10 days on average. So that's pretty cool, actually, I think. Again, like not a perfect, perfect evaluation here because we have relatively low number of signals, but in general, this shows that this seems to be pretty accurate in what it does, basically. So I'm gonna be looking into that a bit more. I'm gonna try this for more coins, obviously, to see if we can verify that it actually works across a lot of tokens. I'm also going to try to improve the methodology a bit, but so far this looks pretty interesting, and it looks to be somewhat of a proof that it actually is a good indicator if some of the big ones, the top 100 in this case, do a drastic change in their balances.
Yeah. Thanks a lot for sharing some of the behind the scenes there, Jan. And this is, by the way, something that we have kind of decided to take a look at, specifically because we have seen anecdotal evidence that this sort of pattern is true and occurs naturally over time with not just the altcoins but Bitcoin as well. So, for example, let's see Ethereum's top whales. Let me share my screen. As I mentioned, there's been some development here. Can you all see my screen?
We can.
Okay.
Yep.
So. The platform that we're currently looking at is SandData. This is our advanced hub for crypto analytics. We share and store all of our metrics and indicators that we've developed over the last 2.5 years on this platform. There's over 150 different on-chain metrics, social indicators, development indicators, different signals that we have created. So one of the charts that we have on here is these top holders chart. So basically, we can select between top 5 and top 100 wallets of a coin that we're interested in. We can, discriminate between exchange and non-exchange wallets because the behavior of them might be different. So, for example, if we look at the last 6 months and the behavior of specifically a non-exchange wallets, so major Ethereum whales, we can see right here, this is what I wanted to show. So we can see that there's been a dip in the holdings of Ethereum whales right around the time that this latest top has started to form. So, and on the other hand, we can see a completely different trend in terms of exchanges. So we've been seeing a rise in exchanges right around up to the top. So this could mean, based on the behavior that we're trying to kind of quantify in Jan's analysis, that there's people, and especially those in the know, are kind of deciding to take their money and run away. So this might not seem all that big of a dip, but if you look at it, it's pretty much 0.2% of Ethereum's total circulating supply. And we can actually look at exactly how many coins that is on this chart. So let's look at that dump right here. So it's their balance has gone from 27.1 million Ethereum to 26.8 million Ethereum. So that's what, 300,000, around 300,000 Ethereum being dumped or moved from the top non-exchange wallets for Ethereum. So this is a big deal for the market to absorb, especially if this has then gone on to exchanges. So it's this type of behavior that we've been seeing time and time again in these charts, and what we're trying to quantify at the moment. And I think I also have an alternative view. Let's see if it loads here. Oh, it doesn't load. I need to set it up again. I think I was watching at these charts, by the way, the ones that I just showed you showed only the top, between the top 5 and 100 different addresses for a specific coin. But we have also kind of isolated all of the different holder categories into the specific charts, and you can select between each of them and show and see their own balances, cumulative balances over time. So for example, here we're looking at people that are owning between, or addresses that are holding between 1,000 and 10,000 Ethereum over time. And we can see that they've been actually accumulating quite sort of successfully during this dip. And then they have started offloading their coins as the rally has kind of started to progress. So it's also, it doesn't necessarily need to be like an immediate indicator like it is here, where you see a dip and it's like, oh, okay, there's a big move coming. It's also interesting to see it on a long-term scale, because this to me would be a signal that there is an increased confidence in Ethereum, even though the price has kind of been dropping. The whales or semi-whales have been accumulating steadily, and then as you see this sort of a cumulative balance of these addresses started to drop, you can say, okay, it seems like the confidence in the coin is starting to dissipate, so we might want to get out of the market for a while. So once again, thanks, Jan, for the analysis. And while we're on the subject of Ethereum, our founder, Maxim, who's not here today, has asked us to show one thing in particular, a setup that we have seen time and time again on our charts, especially for altcoins. So we're looking at this final rally or final top for Ethereum, and let's take the 3-month view. And what we have seen happen, let me just wait until these metrics load. Daily active addresses, and for example, let's take the transaction volume. Yeah, so there's a multi-chart setup, but let's look at it on the same chart. So this is the sort of chart setup that we have seen and that we wanted to discuss. So you can see there's been a rise in both on-chain activity in terms of the active addresses on the Ethereum network, as well as the amount of value being transacted on the network, which is expressed in this case by transaction volume. So on-chain transaction volume basically calculates or takes into account all of the coins that have been used across all of the transactions on the network on any given day. So there's been a steady incline in both daily active addresses and transaction volume during this latest rally of Ethereum. However, this is where we start seeing this divergence, which is one of the more obvious to us, top indicators or forming top indicators. Times where we see the on-chain activity kind of grind to a halt, even though the price is still trying to find its new, uptrend. So in this case, we can see that Ethereum has still, after the on-chain activity has started to slow down, Ethereum has tried to chart new highs, but there was simply not enough on-chain activity to be able to sustain another uptrend. And let's also see what's been going on the social side of things. Pretty much the same setup, right? So we see this chart in particular shows the amount of chatter around Ethereum over the last, in this case, over the last 3 months. But this data is calculated from over 1,000 different social media channels, crypto-specific social media channels that we track. And in this case, we see the social volume of Ethereum, of mentions of Ethereum on crypto social media over the last 3 months. So we see a giant spike here right around the first up. So after this spike, the price started sort of consolidating, and then another huge spike, almost a 3-month high if you ignore this one, right at the bottom, by the way. we see a huge spike in Ethereum-based chatter on crypto community channels. And the moment that this sort of hype starts to dissipate and people move on to other things, we can also see the price start to follow as well. So there's a sort of a very clear divergence between the price trying to trend new highs and the on-chain and social activity starting to slow down, which can very often be telltale indicators of a forming top. I don't know if we want to share, like, let me see if there's network growth as well that might be able to paint this picture a bit more, add some additional context to this. Yeah, pretty much the same thing. So we see network growth is sort of starting to, so network growth in this case is new addresses being added to the Ethereum network. We see a slow uptrend along the rally, and then at right around this stop, we can see it kind of starting to go down to pretty much 3-month lows. So there's less and less addresses, new addresses being added to the Ethereum network. So all of these on-chain and social indicators working in unison to signal that some sort of a trend in price might be imminent. And in this case, it proved to be right. Okay, so this is the first thing that I wanted to show. The second thing that I wanted to show is based on what Brian just showed us. And I actually wanted to see how this looks in our chart. So Brian, you mentioned that DAI holders have, or the top DAI holders have kind of started moving their coins. Do you actually, can you share that spreadsheet with me just so I can open it and we can see what it looks like based on our charts?
Yeah, absolutely. Give me just a moment.
Okay, so these are, let's see, let's look at the last 30 days. So these are the top 50. Let's take 100. Just wait for it while it loads. Oh, you shared it? Nice. So here I'm just trying to figure out what the top non-exchange wallets have been doing with DAI over the last 30 days. So here we can see that there's been, it generally, if we don't include this dip, there's been a general accumulation trend when it comes to DAI among the major whales. So let's look at exchanges as well. This is sort of an up and down sort of thing. So we've seen spikes in exchange inflow of DAI here on January 14th, and then we've been seeing a lot of withdrawals from exchange wallets, only to then be, we see this major spike just recently. So let's try and correlate that with the price of Bitcoin over time. Okay, so for example, yeah, let's not include the price of DAI because it doesn't matter, and let's look at the price of Bitcoin. See if there's anything interesting that we can find here. So I'm looking here at what, last 30 days. Let's look at the last 30 days here as well. So there's been a major spike in several places on the 22nd. So here, right, we see, we see sort of a, how much time has it been that we've seen this amount of DAI in whales wallets? So about a month or so. So a month high in whale holdings of DAI right here. And then we see them starting to dump about 3% of DAI's total circulating supply on the market right around January 23rd, right? So this would be here. And Brian, it seems like your chart has kind of, shown this exact behavior, right? So we see the big DAI whales starting to offload their coins. How many coins is this? Oh, no, I don't need price. So it's about 3 million DAI, 2.5 million DAI, going away from top 100 DAI whales. And then we can see a somewhat correlating dip in Bitcoin. Let's see what's been going on with Ethereum as well at the time, because usually I see this correlation between DAI's on-chain activity and Ethereum's price. So the 23rd, yeah, pretty much the same thing. We're seeing a dump in whale holdings of DAI, as well as a correlating price decrease or a correction for both Ethereum and Bitcoin. Is that kind of what your chart has been showing, Brian?
Yeah, it's exactly the same trend, and it's
Mhm.
even more extreme on mine. If you can see that
Yeah.
big blue dip right there, that's just the top 5 holders. You're looking at the top 100 on yours.
Mm-hmm.
But yeah, for the top 5, we saw a very extreme drop in the percentage that they owned, specifically on the day that Bitcoin and altcoins topped last week.
Let's see. So these are the top 5, I think, right? Okay, so none on the exchanges. Trying to see where this dip was. Maybe it's this one. We just don't. Yeah, I think it's probably this one. It just looks a bit flat here, but relatively speaking.
Could you include the exchange data also? See if that makes a difference, because
Yeah, but
mine uses the total of both.
yeah,
Yeah, it's all flat. I see what
it's
you're saying.
flat. Yeah. Yeah, so it's from 27.7 to 27. So 0.7% of all DAI in existence have been kind of moved away from the top 5 wallets, which is, even though it doesn't seem like an impressive dip here, it's definitely notable. Okay, cool.
Keep in mind that the amount of DAI. So if you are a big DAI holder, potentially if you have a large CDP, if the price of Ethereum drops, then you're going to use some of these DAI to return your loan so that you don't get liquidated.
Mhm.
So this could be the kind of dynamic that we see here. I mean, as the price of Ethereum is going down, you either need to reduce your DAI holdings or put more Ethereum as a collateral so that you are not liquidated. So that could be a kind of a thing, but also keep in mind that DAI can be used for many other things.
Yes.
Like you can put the DAI into a savings account, like so that you earn like a 6% annual return on it, which is going to put it out of circulation also. So yeah, it could be.
It could be DeFi related dips, is what you're saying, right?
Yeah, exactly.
Right. Okay. Cool, nonetheless. Okay, I actually just wanted to, I think we have time for one more exposition here. So I wanted to show, I just showed these divergences in daily active addresses and transaction volume for Ethereum and how they've kind of correlated with the price decline. We've seen the same thing in basic attention token here as well. So let's just, as another example to validate the same theory. So there's been a rise in daily active addresses and transaction volume or general on-chain activity for BAT over the last, what is this, like 2 weeks? Not counting the last 5 days. So basically, the moment that we've reached this inner top of $0.23, there's been a obvious divergence between the price action and the on-chain activity. So the amount of daily active addresses has kind of stifled, as well as the transaction volume, which is kind of plateaued at these sort of standard level. And at this point, we see the price also start to throttle and go back to its sort of early November levels. So this is another example of these forming price and daily active address divergences, as well as the divergence between the transaction volume and the short-term price action. Let's see what's been going on with basic attention token on the social side. I think there's also there's been a small spike in the social volume that has also kind of correlated. Yeah, so same thing here, right? So we've seen since the start of the year, this is the highest that there's been talk around basic attention token so since the start of the year. So 2-week high for the social mentions of BAT or basic attention token on crypto social media. And right as we see this sort of trend, social trend start to dissipate and the crowd moves on to other things, we see the correlating sort of decline in basic attention tokens price as well. I think I've found a few different indicators as well. So it says token age consumed spikes. Let's see what that means. Yeah, so there's also been a sort of notable spike in token age consumed right around this very top. So the spike in token age consumed basically means that we are seeing a movement of coins that have been not moved for an extended amount of time. So token age consumed values the coins that have been idle more than the coins that have been kind of transmitted on the network on a daily or weekly basis. The premise here being that long-term holders, people that have been maybe holding the coin since the ICO, usually do more of their research. They are more in the know. So the moment that they start moving tokens, it can be a major market event more than somebody that's just bought BAT a week ago, right? So we see this correlating spike in the token age consumed, meaning that old coins, old BAT has been moving. And I think very soon we'll be able, Val, correct me if I'm wrong, we'll be able to see exactly the time where from these tokens have last moved, right here on these charts. So we'll be able to see exactly, for example, this spike has includes coins from, let's say, ICO days, or it includes coins that have not moved for the last year or so, right?
Yeah, so we want to roll out this feature. We pretty much have the data, but the main challenge is how to visualize it. Actually, if you click on the H that is on the right side of the chart, like there is this H, it shows you, yeah, this one. It shows a kind of a proof of concept of how this could look like. But right now it's showing not for this particular day, but it's showing for the week where this spike is in. So if you hover over it, it should show you for this week when was, yeah, so it shows that a lot of tokens moved on the 15th.
Yep.
But yeah, I mean, it's there are a couple of tweaks that needs to happen on this diagram. So it needs first to show data only for this particular day and not for 1 week around this date.
Mm-hmm.
And the other thing that I think needs to change is not to show the tokens as dates, but as price buckets. So to show at this day for all the tokens that moved, what was their price before that? Like where these tokens, from which price ranges these tokens are coming from?
Right.
Are they some cheaply acquired tokens that moved on chain, or maybe expensive tokens that moved on chain? So that could be quite informative. So we're currently tweaking the API and the visualization to show that.
Very cool, and I very much look forward to that. All right, so one other thing that we want to look at in terms of BAT's sort of pending correction was this spike in deposit volume. So basically, deposit volume means that here we track only the addresses that are, so deposit addresses, meaning that addresses that are sending coins to exchange wallet. So whenever there's a spike in deposits volume, that means that the amount of coins that are moving to exchanges has spiked. So here we can see this very telling spike in deposit volume. So 18.9 million BAT has been kind of moved through deposit addresses at this point in time. So in this case, given the price action, we can pretty much assume that this is going to add to the rising sell pressure for basic attention token that might prove too hard for bulls to absorb, which it seems so far to have been a self-fulfilling prophecy. Let's see one more interesting tidbit for BAT-related metrics over the last 3 months. So, okay, I think, what was it that I wanted to show? So here, it says whales accumulating throughout the dip, but dump on top. So yeah, let's see which one. I think there was one of the categories that has been very telling in terms of, yeah, so this is pretty much the same. Yeah, this is what I wanted to say. So this one shows the addresses that are holding between 100,000 and a million BAT. So pretty much, a high-end retail holders or early whales, given that the price of BAT is 0.28, I think, at the moment. So we can see a very similar behavior of these BAT whales as well as what I just showed you on Ethereum holder distribution charts a minute ago. I don't think I have it loaded up anymore. But you see this sort of, even though BAT has been kind of trending downwards, we see that the whales have been accumulating throughout the downtrend. And then similar to what we've seen Ethereum whales do, which is kind of start to offload, even though the rally has, continues to grow, we see this sort of lack of confidence in BAT's price action, short-term price action among the BAT whales, and they start dumping significantly right around this very top. So this is another signal. If you were looking at our charts at the time and you saw these whales starting to offload their bags, as well as you saw the spike in BAT's exchange volume. I think I have it right here. Let's see if it shows. Oh, no. Let's see here. So that I just want to show that there's been a correlating spike in exchange volumes as the whales were dumping. So yeah, right here. So there's been several spikes in the total amount of coins that have been moved to exchanges. So this particular chart shows the difference between the coins moved to exchange wallets, in this case BAT, as well as the amount of BAT that has been moved away from exchange wallets. So if there's a spike on this chart in